Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll stream live.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday, only on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion, you already are.
Bloomberg Business Week Daily, only on Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Good question. Good question. Great question. I so appreciate that question because let me ask interesting questions.
Bloomberg Television, top experts, great questions.
It's time to buy the dip again. That is according to the trading desk over at Goldman Sachs, telling clients that losses in momentum stocks may present a dip buying opportunity so long as tech earnings next week, including NVIDIA, but really it's just NVIDIA, drive a prolonged AI sell-off. Joining us at the desk is Chris Barone. He is partner and chief market strategist at Strategas. That is a Baird company. And Chris, you think about this sell-off that's been developing in the S&P 500. We're looking at 5 or 6 days of losses on your big benchmark. What's your opinion? Is this a time to step into those losses and try to catch the knife?
Well, I think the good news is it's been very rotational under the surface. I mean, most stocks have actually been up the last several days, even as some of the big AI darlings have been hit here. Now, I would say in terms of the index itself, maybe talk to me in 6 weeks. I think it's the last week of August. I think we're in, as we know, one of the weaker seasonal periods of the calendar. This is really not the time of the year to be chasing momentum. I think we'll get a better. I think we'll get a better chance to quote buy the dip, say late September, early October. I think worst case you're looking at 6150, maybe 6200 on the S&P. But remember, as the big stocks have come in, look at all the durables, the economic cycles actually starting to turn back up. Home building, autos. That seems like it's still a pretty constructive economic story being told.
So this seems to be these drops for the last few days. They haven't been big.
Hello, this is DrPaulCottrell, and we are live streaming on August 21st on Rumble, YouTube, my website, the-studio-reykjavik.com, and simulcasting on X Basis. So please, if you would like to ask a question or give me your opinion about the news today, ask for the mic and you will be live on the show. So thank you for joining. Please help support the work that I do by subscribing to all the channels I have. I have 4 channels on YouTube, Brighteon, Bitchute, and Rumble. If you would like to help support, please ask your social media to follow me and share the links. It's really important. And you can follow me on X and on GETTR. All the links are in the description of this video and all my videos. In addition, for the ones that are domestic or international audience that would like to help support the free work that I do, I put all these videos out for free. I don't put anything behind a paywall. You can donate on my website, the-studio-reykjavik.com. You can donate through Stripe, PayPal, or Buy Me a Coffee, or be a paid member to my Patreon channel. You can also be a member on Buy Me a Coffee you would like. In addition, I have great products on my store. I have ebooks, supplements, and course material on immunology and pulmonology. So if you would like to help support the work that I do, there are many ways to do that. Some of the great products that I have on my store, the-studio-reykjavik.com, are products that will help to slow down the aging process, improve your longevity and vitality. These are products that I use every day. If you follow the protocol, you are going to improve your health. So please follow along and stack the supplements the way I tell you to stack them, and you will benefit from it. In addition, I'm telling you how to benefit from the market. So it's a way for you to help with your savings and help with your health. So please help support the work that I do by going to my store, the-studio-reykjavik.com, and sharing the links and asking your social media to follow me. I greatly appreciate it. We're gonna go to some of the news that's been coming out for business news on CNBC. Let's go to this clip about Walmart.
Walmart reported earnings 68 cents a share. First earnings miss since May of 2022. Revenue is above expectations though, at $177.4 billion in the quarter, which is above $176.16 billion. Major big box stores like Home Depot, Lowe's, and Targets have all reported this week. Joining us for a retail recap, Michael Zakor, founder of 5 New Digital. Michael, stock Walmart's down, as you can see. It's had a great run, and you compare it to Target over the years. It's a multiple of what Target has delivered or failed to deliver. Actually, was there something? Were these numbers troubling to you from Walmart today, or stocks
not at all, Joe. In fact, these numbers are just fine. Walmart is growing. They're probably going to add $130 to $140 billion in revenue over the next couple of years. Walmart is winning on the back of value consumers, and value consumers are across the board now, from the top of the economic chain down to the bottom. People love what Walmart's offering in terms of service, technology. They've built the ecosystem that Target hasn't, and that's really the big difference. Walmart is everywhere now.
Will the new guy at Target be able to replicate what Walmart's? I guess I'm asking you indirectly. That stock was down a lot yesterday. Did you have the same feeling that they needed to go outside the company?
Well, yeah. I mean, listen, I'm not going to question Walmart's board or leadership at this point. We do want to give them a chance. Where Walmart has fallen behind, where Target has fallen behind. Is they're just not investing in the technology, the ecosystem, and omni-channel. They're just not value oriented enough, and the selection is weak.
How about Home Depot and Lowe's?
Yeah, so there's some really good news, I think, for the economy. Home Depot and Lowe's have both done very well. Obviously they're not focusing as much on the big projects now, but we're starting to see the consumer invest in small projects around the house. And so, with Lowe's going all in on the pros, Home Depot picking up more pros, they're just offering more to consumers. And the consumers walk into Home Depot, Lowe's, and they're not just thinking about projects, they're thinking about, everyday items for value as well.
Do you think about tariffs, Michael? And what Walmart said today? Everybody's different, obviously, but how are they trying to navigate through these right now in your view?
Yeah, so with retailers, right, there's people saying, look, everybody's in the same boat with tariffs, but they're not. Some people are on a Royal Caribbean cruise ship, and others are in a dinghy, depending on the size of the retailer. So the ability to absorb uncertainty and to absorb the higher costs, certainly the big guys are extending their lead in this space. But yeah, it's simply the uncertainty around tariffs that there's still a lot of wait and see in the retail industry, and that's happening at the same time that the entire retail industry is undergoing dramatic changes in terms of technology, in terms of what is a retailer, what's the difference between a retailer, a wholesaler, an online company. And so the companies who are building these massive ecosystems like Walmart and like Amazon, they're going to weather this storm, the tariff storm, a lot better than some of these smaller.
All right.
Business owners and salespeople.
So let's go over the market has opened up, and the S&P 500 is at 6,368. I have a price target for year end at 6,800 to 7,000 by year end, especially if the Federal Reserve lowers rates. There is a support level at 6,250 and a resistance level at 6,500 right now for the S&P 500. VIX is trading at 16.52. Euro is trading at 116. Oil is trading at 62.72. BITO is trading at 20.49. Bitcoin is trading at 113,000. Japanese yen is trading at 147.6. Natural gas is trading at 2.804. And oil is trading at 20.20. So let's talk about the other resistance levels. So I said, to reiterate, the S&P 500 resistance level to 6,500, support level 6,250. Now, for BITO, which is a long ETF for Bitcoin, Bitcoin's trading at 113. I think Bitcoin will continue to go down. BITO is trading at 20.49. So we have a resistance level at 2149 for BITO and a support level at 20. Oil is trading at 62.72. There's a trading range between 60 and 65. So you have a support level at 60, resistance at 65. BOIL is the longing ETF for natural gas. Natural gas is trading at 2.799. Now we have a resistance level at 2.814, and we'd have a support level at 2.5. It looks like that natural gas wants to try to get up, go to the 3-handle range the last couple trading sessions. So I suspect that by next week, we should be breaking the resistance level of 2.814. We might be breaking it at the end of this session. TYD is a ETF that's for the belly of the curve, the 7 to 10 year treasury. Now, the 10-year treasury yield is trading at 4.318. And TYD is trading at 25.27. All right, so TYD goes up if the price of the belly of the curve between the 7 and the 10-year treasuries, those prices of those bonds go up and the yields go down. That's how it works. All right, so the TYD ETF is trading at 25.27. So we have a resistance level at 25.87 and a support level at 25.02. All right. If the Federal Reserve lowers rates this year, we'll see TYD go up. All right, so that's my economic summary for right now. Right now, the S&P 500 is down by 23 points. Let's go back to Bloomberg.
You're sitting around with your scotch at the end of the day and thinking, God, I love this investment thesis.
That sounds nice. Listen, I think when you look at the landscape of the world here, I want to lean into areas of the market that I perceive to be unappreciated but working. And that's always the best combination of this, where you have a very dismissive class of people about it, yet strength. And I think Japan fits that bill. I think consumer discretionary fits that bill here as well. I'll tell you what does not fit that bill. There's still so much enthusiasm about gold and precious metals. Gold hasn't made a dollar of progress since the April blow-off, I think April 15th, April 17th. And that's against the backdrop of Middle East conflict, Ukraine, Russia, tax bill, tariffs. Gold has been dead money for 4 months. I think it's finished here. People still love it. We don't see it.
That is also a great point. I'm looking at the chart of gold right now, and you're right. You see the steady climb higher, and then we've just been treading water for several months now.
You know what's been unique? The gold bull market really commenced with what I would say is maybe the weaponization of dollar back at the start of the Ukraine-Russia war in early 22. So I think gold's indifference here, and frankly, I suspect in time, gold's weakness is another tell that, hey, we're getting closer to peace there. I think the weakness in European defense companies reflects that as well. Look at Rheinmetall, look at BAE Systems, look at Thales in France. There seems to be a story coming together that the market's pretty optimistic about this getting done.
All right, Chris, great to get some time with you. That is Chris Barone of Strategas. That is a Baird company. Meanwhile, let's get a check on this market. We're about 7 minutes into the Thursday session. The S&P 500 continuing to sell off here, down for a fifth day, only down about 0.3% right now. But I want to highlight the breadth that we're seeing to the downside. You have fewer than 100 names in the green right now, more than 400 nursing losses. Up at the top, this certainly helps. You have NVIDIA higher by about 0.7%. We've actually seen it in the other column for most of this week, but NVIDIA rising a little bit. Same story when you take a look at Alphabet, looking at gains about 1%. That is trying to lift this market, but take a look at some of the weights. Walmart reporting earnings, that rare profit miss. That's good for a 4% decline. That is your biggest loser on the index right now. But you also have Amazon, Meta, Costco, etc., also weighing down the index. And you add it all together, definitely more losers than gainers. And that's going to be true at the sector level as well. The only sector in the green right now is communication services. That's pretty much tech in disguise, only looking at a gain of about 0.1%, and then it just gets worse from there. Currently, your biggest losers are real estate, financials, and consumer staples. Matt Miller down by about 1.3%.
It is especially ugly from an industry group point of view. That does not look good. All right, and I note that the Mag 7 index is also hunched right now, so not making a lot of forward progress. Coming up, Walmart falls after the world's largest retailer reported its first profit miss since May of 2022. We'll break down the earnings call, which just happened with analysts. Next, this is Open Interest.
Please go to my store, the-studio-reykjavik.com, and get the great supplements that I offer. I have a protocol where if you follow it, you're going to help the different organ systems in your body and slow down the aging process. So let's start with the foundation of that protocol. So there's a foundation aspect to it and then pillars on top of that foundation. So a foundational piece of the protocol is taking the complete multivitamin. This is easy to digest, and it has the vitamins and minerals that you need as cofactors for enzymatic activity. A lot of people don't realize that multivitamins are really important as a cofactor that binds to an enzyme to change its conformation to allow for the enzyme to work better. So it's important, very important, to take a high quality multivitamin as the foundational piece and you build off of it. This is a great multivitamin for that purpose. It's easy to digest. Another foundational piece that you stack with the multivitamin is the probiotic. The probiotic, I have it in VeggieCap form or in powdered form. I have it in powdered form in stock right now. Now, by taking it every day and mixing it with water or just with soft foods, I mix it with soft foods. But by taking it every day, you're going to help your gut biome and your microbiome. That will improve your metabolism. That will improve your communication between your gut and your liver and your gut and your brain. That's important because your liver is a major detoxification organ. But not just that, it helps to process lots of different types of proteins. It helps to process cholesterol. It helps to process glucose. So it's a very important organ. In addition, your gut is better gut biome will improve the communication between your gut and your brain. That will allow you to sleep better. You'll have less brain fog. You'll be able to concentrate. You'll be less irritable. When you have better sleep, you're going to consolidate memory. So gut health is super important. A good gut biome will also improve your skin. So it behooves you to take a high quality probiotic. Now, by improving your gut biome, you're improving the mucosal layer of your gut, and that will get thicker. You're going to have the proper population of the microbiome that will allow for your immune system to be better. So you're reducing leaky gut syndrome. You're going to have a higher concentration of IgA. These are all super important to improve your health. If you have a bad gut biome, you're not going to be sleeping as well. Your skin's going to have problems. You're going to have problems with metabolism, and you increase the chances of leaky gut syndrome. So it's important to take a good probiotic and a good multivitamin. So go to my store, the-studio-reykjavik.com, get the probiotic and get the complete multivitamin as your foundational stack, and then you build off of that. So please go to my store, use discount 5, you get $5 off any order. If you spend $100 or more, you get a free gift until supplies last. Go to my store, the-studio-reykjavik.com. The link is in the description of this video and all my videos.
Its same-day grocery delivery service has intensified competition. You can certainly say that again. Instacart shares down more than 3%. And finally, we had Hewlett-Packard Enterprise getting raised to a buy over at Morgan Stanley. Analyst says that the recently closed Juniper deal will have a positive impact on earnings. Finally, some good news. Those shares up about 2.2% now.
All right, interesting upgrades and downgrades there. I was just looking through Cody's perfume portfolio here.
Anything you like?
Well, apparently like 70 different brands: Hugo Boss, Gucci, Davidoff, Bottega Veneta, Calvin Klein, Marc Jacobs, but also Glow by J.Lo.
I just mix them all together, so.
Lady Gaga Fame, a unisex perfume. Released by House Laboratories in partnership with Cody. Let's turn back to the world's largest retailer, where you can no doubt buy all of these things. Walmart shares falling after profit missed expectations for the first time in 3 years, overshadowing higher sales and really the outlook. Joining us now to talk about this is Andrea Felstead, a Bloomberg opinion columnist who's been covering consumer goods and the retail industry for years for us here at Bloomberg. And Andrea, this has been a company that's the stock has been successful, right? Until today, it was up 13, 14% year to date. Over the last 5 years, it was up 150% if you reinvested your dividends. Why such a sell-off today?
It's really because they raised their sales forecast, but they've left that profit forecast unchanged. And the profit miss was really about higher legal costs and some restructuring costs. But the outturn has worried investors that the great run that Walmart's had may be coming to the end, and maybe there are some cracks in what has been a really great story over the last few years.
But the thing is, who can take share from Walmart? And I especially go to the grocery business. They have a massive grocery business. Okay, maybe Amazon could chip away at that, but it seems like Walmart is just really dominant.
Well, there's a very interesting competitor coming from Europe for Walmart, which everyone really should keep an eye on, and that's Aldi. Aldi's really been expanding in the US. They have really low prices. They've been getting a lot of traffic, a lot of footfall. Now, about a decade ago in the UK, Tesco here was very dominant, and it really wasn't as aware of Aldi as it should have been, and Aldi really took a lot of sales, and that is a real worry for the US. So Walmart really, it might be dominant, it's got Amazon, but it really has to stay on its toes with Aldi. It can't afford to let those low prices in its DNA slip.
Yeah, that's for sure. And you are seeing more Aldis pop up around the U.S., so it's a good point and something to keep an eye on. I do want to get your opinion on Target. Of course, we got the news yesterday that they're appointing long-serving executive Michael Fidelki to succeed as CEO here. He is a company insider. And Andrea, you wrote about how really he's taking over a company that's confronting an identity crisis right now.
Exactly. I think his turnaround that he's got to do is much harder than the one that Brighteon Channel did. He had to fix the nuts and bolts, which Michael Fidelka has to do too. He's really got to decide what Target stands for. You know, it's had some real, flip-flopping in its identity with the Pride issue a couple of years ago, backtracking on DEI, and Target really put every kind of inclusivity at the heart of its strategy. So that's really stung a lot of customers. He's really got to, fight back and, reclaim Target's identity and win the trust of customers, at the same time fighting against Walmart, which is really going after, it's saying today it's growing with wealthy customers. It's really going after those more affluent consumers who typically shopped at Target.
Wait, do you think they need to kind of take a stand then? If Target is more the left-leaning soccer moms and Walmart is more of the Trumpier country shoppers, should they do?
I think they should. I think they should reassert their identity in the way that they always had that. They were always known for being very inclusive with customers, and that slightly more affluent shopper base means their customers can afford to decide where they shop, whereas I think Walmart's customers typically have been driven by low prices, that need for value. When you think about Costco, which has stuck to its principles, it's always put things like higher staff wages at the heart of its strategy. It's actually been gaining shoppers and gaining footfall. So I think there's a real lesson here for Target.
All right, Andrea, thanks so much for joining us. Andrea Felstead there, joining us from Bloomberg Opinion. You can check out her work by typing OPIN-GO on the Bloomberg terminal. You can find her on Bloomberg.com as well. We're going to have more on retail in the next hour. TD Cowen analyst Oliver Chen joins us. He has a buy rating on Walmart stock. We're going to talk Walmart with him. Maybe dig into a little TGT as well. Coming up,
Okay, initial jobless claims went up. It's at 235,000. It's higher than expectations. So the job market is weakening a little bit. With the retail data that's coming out, seems as though one could make the argument that the shopper is a little fatigued, especially with with Target. So, maybe the economy is starting to falter and it's increasing the chances of the Federal Reserve most likely lowering rates. If that does happen, then that will be accelerant for the S&P 500 to go up. Please go to my store, the-studio-reykjavik.com, and get the magnesium and zinc. Magnesium and zinc will help with your immune system, but magnesium also helps with brain function. Super important. So take magnesium and zinc every day. Protect those neurons, super important. Vitamin C plus magnesium will help with your immune system, your skin, and your brain function. Stack them together to get the max benefit. Now, another powerful stack that you can combine with the magnesium and zinc and the vitamin C and magnesium, or you can take them separately. Ubiquinol. Ubiquinol is the most bioavailable form of CoQ10 that you can get. You can't get anything better than this. Ubiquinol also is an antioxidant. So it's going to soak up free radicals and help the health of your mitochondria, so your energy levels will go up. And ubiquinol will protect neurons. So it's a great neural protector, and that's the reason why it stacks really well with the magnesium. NAD+. NAD+ supplement will boost up your NAD+ levels. That will increase your energy, and NAD+ helps to repair DNA damage. NAD+ helps with neural health too. So when you stack these together, it's a great combo for neural protection. And an even better combo is taking the magnesium and zinc and the vitamin C and magnesium. So you're helping your immune system, you're boosting up your energy levels, you're soaking up free radicals, you're repairing your DNA damage, and you're protecting your neurons. So please go to my store, the-studio-reykjavik.com. Use discount 5, you get $5 off any order. If you spend $100 or more, you get a free gift until supplies last. So get the NAD+, the ubiquinol, vitamin C, magnesium, and the magnesium and zinc. Take them together. It's a powerful neural stack. So please go to my store, the-studio-reykjavik.com.
4 times in the last 6 months, according to reports. Walmart is off a whopping 5%. We just talked about that. Boeing getting a boost after it sells 500 planes, or agrees to sell 500 planes in China. Intel down a little bit. This one is interesting. It has continued to fall, and along with the rest of the tech sector, really reducing its valuation to only 199 times future earnings. So, Katie, I guess investors not buying the dip today.
Yeah, it's a real bargain there. Let's talk about OpenAI, though, because OpenAI's CFO is outlining a new strategy for the firm. Sarah Fryer says that OpenAI is considering helping other businesses tap into the data centers and physical infrastructure needed for artificial intelligence. Bloomberg Intelligence head of global tech research, Mandeep Singh, is back in studio. He joins us now. Mandeep, tell us what's in it for OpenAI. Why do they want to do this?
Well, right now, what we are seeing is OpenAI has the best models when it comes to deploying generative AI. And with reasoning, that's the big shift this year. What you're seeing is the compute demand has been off the charts. In fact, OpenAI has signed deals with Google and CoreWeave. So remember, OpenAI had an exclusive partnership with Microsoft. Everything was deployed on Microsoft, but now they are leasing infrastructure from the likes of CoreWeave and Google. And that just goes to show they just can't meet the demand. It's like NVIDIA's chips. Similarly, everyone wants to use OpenAI's models, and they see that demand. They want to get into infrastructure. I just don't know if that's the right thing to do. I mean, everyone wants to vertically integrate when it comes to tech. But in this case, OpenAI is also burning a lot of cash with their compute. I think Microsoft said they are burning $3 billion per quarter.
Well, they're not there yet, right? I mean, Sam Altman said they're going to need to spend trillions on compute. And as they do that, as they build up so much experience in data center operation, I guess Sarah Fryer's point was, now we know everything about it. After we get to a place where we have enough for ourselves, maybe we'll help other people get into the business as well.
So in the enterprise world, I mean, in theory, it sounds good, but you have to remember the reason why hyperscalers are so dominant is because they have all the legacy workloads from the companies. The databases reside around hyperscaler systems. So to build a new compute infrastructure, yes, you can have the GPUs, you can have the models, but the data on which you want to run AI still resides on those hyperscalers. So it's very hard to establish yourself as a new player. NVIDIA actually has mentioned about that as well. So clearly, I think there are a lot of other players who want to get into infrastructure business, but it's hard because the hyperscalers have such a strong hold in terms of the existing workloads that are running on those systems.
Google has a ton of data, right? And they're one of those hyperscalers you're talking about. They came out with a bunch of products today, not AI stuff necessarily, but I guess they're hoping that that data, that their models, that Gemini is going to make people switch out of the, welcome people switch out of the Apple infrastructure and finally buy a Google phone. I can't even remember what they call their phone.
Pixel.
Pixel, there you go. Google watches. They're going to get Katie to give up her Garmin. And they want earbuds they have out. Does that look like a successful strategy to you? Has it ever really worked out for Google?
I mean, for Google, it's always about their ecosystem, and Android is what they're really focused on.
Right.
I don't think they're really leading into a hardware strategy where Pixel will, sell more units than an iPhone. That's not going to happen. I don't think the company's betting on it. But for them, it's about Android being a better operating system than iOS and integrating AI into wearables. That's where all the demos were focused on, that even in your earbuds, you can run AI partially, and that will
even you.
We're going to go to EU talking about tariffs on CNBC. But before we do that, please go to my store, the-studio-reykjavik.com, and get the cleanse, which is a 30 parts per million, or max 35, which is 35 parts per million. Take a teaspoon a day, swish in your mouth, gargle about 20-30 seconds, and then swallow it. What that's going to do is improve your oral cavity and your oral pharynx, help with the epithelial lining, maintain the mucosal barrier, and boost up your immune system. It's the first pillar of the core protocol. Remember, the foundation is the multivitamin and the probiotic. The first pillar, the max 35 cleanse, or even max 14. And take a teaspoon a day. If you're not feeling well, take a tablespoon or two a day. If you're around someone that's not feeling well, take a tablespoon or two a day, and then go back to your maintenance dose once everything's all clear. But it's important to boost up that immune system. So please go to my store, the-studio-reykjavik.com, get the cleanse or the max 35, and take a teaspoon a day every day. I've been taking this protocol since 2025, or since 2020. So it's been 5 years. So please go to my store, the-studio-reykjavik.com, follow the protocol. It helps boost up that immune system. Use discount 5 and you get $5 off any order.
You know your business better than anyone, right? So why not build an app to run it with Base44? This finance app solves your business headaches. Track.
Yeah, good morning to you, Carl. The United States and the European Union are releasing a joint statement this morning, laying out more specifics around their trade agreement that was announced earlier this summer. A senior administration official briefing reporters last night called this a positive step forward, and he said the administration's goal here is to use trade agreements like this one to layer the World Trade Organization and make that international body and some others less relevant. Now, the statement says the European Union intends to eliminate tariffs on all U.S. industrial goods and to provide preferential market access for a wide range of U.S. seafood and agricultural goods. And in it, the United States commits to apply the higher of either the U.S. most favored nation tariff rate or a tariff rate of 15% on goods from the European Union. Now, one key point of contention here has been the auto industry. In the statement, the U.S. says it will reduce tariffs on European automobiles, but only after the EU formally introduces the necessary legislative proposal to enact tariff reductions itself. So to wait for that, a senior administration official says the hope is that process will only take weeks. We'll see. The statement also codifies that the EU intends to procure U.S. liquefied natural gas, oil, and nuclear energy products with an expected value of $750 billion through 2028, and it intends to purchase at least $40 billion worth of U.S. AI chips for its computing centers. Now, on another key note on pharmaceuticals from the EU, the agreement states that the tariff will not exceed 15%. Now, that's something that investors will be watching, as Trump has told CNBC, that rates on imported pharma products could eventually be as high as 250%. So this would be much less than that. So a win for the European side on that point, guys. Back over to you.
Eamon, when we first got word of the deal, there was this notion that EU firms would invest some $600 billion in U.S. sectors by 2028. Any language this morning as to how the EU would sort of enforce that investment from the private sector over there?
Yeah, there is language in this statement around that, and it's sort of broadly put. It says in the context of the trade relationship between the two countries, they do billions of dollars, and EU firms are expected to make those purchases up to $600 billion. A senior administration official talking to reporters last night said, what the U.S. side is going to do is just monitor that and make sure that that happens. But the language there, in the statement, you can look at it yourself, maybe a little bit squishy in terms of just this expectation that those purchases will happen. U.S. officials have said that they're not that worried about it, given the size of the trade relationship between the two economies. That amount of purchases.
U.S. July existing home sales rise to 4.01 million. Estimate was 3.92 million.
Expected to happen, sort of in due course.
So that's what, like Siemens here, for example, just spending a lot of money to build a new plant or something along those lines would count. Eamon, do we kind of know what fits in?
We don't know. There's some language in there around guiding toward specific sectors. A senior administration official ticked off a couple of the sectors on a call last night. But yeah, I mean, these are individual companies inside the EU. That's not a state-run economy, as an official put it last night. So the EU can't direct companies to spend money. So the EU can't really force this to happen. All the U.S. can do is monitor it and keep their fingers crossed. And if there's any significant problem, they said they'll revisit it with the EU side.
So on pharma, I mean, this was a very close watch one because a lot of generic drugs are made in Ireland. A lot of drugs are shipped from Europe to the United States. 15% is maximum tariff. I guess in Ireland they're welcoming the clarity and saying, I guess it could have been worse, but that's still an elevated tariff rate for drugs coming in here.
It's absolutely an elevated tariff rate beyond what we had, say last year. But I think, if you're the Europeans, you look at this and you say, well, it could have been a lot worse. And that is, President Trump's negotiating style. He puts these threats out there that are enormous and sort of terrifying for people and really rattles the cage. That gets the attention of the trading partner. And then, they feel a little bit relieved when they get down to only 15%. But if you'd said 2-3 years ago there were going to be 15% tariffs, that would have been horrifying to people on the merits.
Eamon, thank you. Eamon Jabbers outside the White House.
At KPMG, our approach to managed services is focused on strategic outcomes and informed by broad functional, process, and sector expertise.
Alrighty, so let's take a look at what else is popping up on the news here.
Ukraine saying an American electronics plant in the western part of the country is one of the several targets in a massive Russian drone attack overnight. One person is dead and 15 people are hurt, according to President Zelensky, who also wrote in a statement, there have been no signal from Moscow that they are really going to engage in meaningful negotiations and end this war. Pressure is needed, strong sanctions, strong tariffs. Former CIA station chief and Fox News contributor Jan Hoffman is here to break down how this will impact peace talks between Russia and Ukraine. Dan, good morning to you. So Ukraine's foreign minister is saying this was a U.S. electronics plant that was hit in this Russian drone strike that hit Ukraine overnight. So how do you think that will impact things, and how big of a deal is this reporting?
Yeah, well, first of all, we need to collect the facts. There's always a bit of the fog of war here, and so there's initial reports about this attack, which is part of a larger attack, massive drone attack by the Russians. And really over the past few weeks, the Russians have been launching ballistic missile and drone attacks on Ukraine unabated. But again, we need to get all the facts here, and then we can assess what damage was done. And I'm sure that Director Ratcliffe and the rest of the intelligence community will be looking for reflections to determine whether Russia deliberately targeted this facility, if indeed they did.
Okay, so on top of that, we have new comments from Russia's foreign minister yesterday, Sergei Lavrov, who's saying now that Russia will only accept security guarantees if Russia is part of the group providing security to Ukraine. So essentially they're saying Russia is going to protect Russia from invading. They can't be serious.
Well, they are serious. They want veto power over the security guarantees, which makes them essentially useless. And this is Russia's negotiating strategy. It's a not so subtle way of telling us that while President Trump rightly wants to end the war, and he's doing everything he can to do that, Vladimir Putin still thinks, in spite of 1 million casualties, that he can win the war. And he's continuing to proceed along that path to overthrow the democratically elected government of Ukraine, install a puppet regime. But beyond that, I've always felt, and then we've been talking about this on the network, that Putin wants to assert dominance in Russia's self-designated sphere of influence. I don't think anything could have bothered him any more than the fact that the Trump administration solved a long-term conflict between Azerbaijan and Armenia. And I think Putin was irritated by that. He also wants to demonstrate that the United States doesn't have the throw weight to influence events in his part of the world. So we'll have to see now whether we dial up the pressure on Russia to try to bring them to the negotiating table.
Yeah, because that's always an option. But Dan, what does this really mean, these new comments from Lavrov? Does that mean that we're back at square one when it comes to this negotiation and all the gains that the Trump administration thought that they made didn't actually come to fruition? Is Russia really changing their tone here?
Well, first of all, we've got a significant tangible result in that the Trump administration has really energized our European partners to take responsibility for security in their own continent, and that's important going forward. We've, I think, proved the concept that in spite of everything we've tried to do to bring peace in this war, that Russia is not interested in doing that. So there's a lot more that we can do. Germany can send Ukraine the long-range Taurus missiles. We've got $300 billion worth of Russian frozen central bank assets to look at. Denmark could close the Danish Straits to the Russian shadow fleet. We can look at secondary sanctions as well.
Yeah, and the White House is saying they're going to be brushing off any bluster unless it comes from Vladimir Putin himself. There's always the possibility of a trilateral meeting. The Trump administration is trying to go for that bilateral meeting, although Sergei Lavrov says that that might not happen. Really quickly on that front, do you think that it will? Do you ever see Putin and Zelensky meeting face to face?
There just isn't any evidence at this point that such a meeting would take place. Vladimir Putin will obfuscate and speak in flattering terms publicly and privately with President Trump, but there's no indication that Russia's going to do anything other than continue to rain down hell on Ukrainian civilians, unfortunately.
Former CIA station chief and Fox News contributor Dan Hoffman. Dan, thank you for joining us.
I'm Steve Doocy. I'm Brian Kilmeade.
And I'm Ainsley Earhart. And click here to subscribe to the Fox News YouTube page.
Please go to my store, the-studio-reykjavik.com, and get the collagen. This collagen is a dual-purpose supplement. It's a powder. It's a month's supply. You mix it with soft foods, filtered water, smoothie, or even milk. But take it every day. Do some resistance training. It's going to help with your musculature, your bone density, your cartilage, your health for your joints. It'll help with the skin, hair, and nails. So it's a dual-purpose supplement. It has a very comprehensive typical amino acid profile that's shown on the screen here. You can read the label on my website, the-studio-reykjavik.com. But take this every day. It stacks really well with the gels that I have, vitamin C with magnesium, C60, and resveratrol. Why? If you want to improve your skin, you improve your skin topically with the gel. You improve the dermal layer with the collagen, with the vitamin C and magnesium, and drink filtered water, about 32 ounces to 64 ounces per day. What that do, will cross-link, the vitamin C will cross-link with the collagen and improve the dermal layer. To improve the basal layer, you want to take the C60 and the resveratrol. That's where your new skin cells are being generated. So please go to my store, the-studio-reykjavik.com, get the collagen, and help with your musculature and your bone density and your joints and even your skin. Use discount 5 and you get $5 off any order. Another thing that's very important to do is to detoxify your body every day. You can detoxify your body by taking zeolite. Zeolite will bind to heavy metals, toxins, and chemicals, including forever chemicals. And what that will do is it'll bind and allow you to urinate them out within 6 to 8 hours. It's important to detoxify your body, but also detoxify your environment. Look around your home, get rid of chemicals, cleaning supplies, paints, things that are pesticides that you don't need. If you need these cleaning agents or chemicals around your house, put them in a double layered container. That double layered container, it's very simple. You get a container that's like from Container Store. You put them in and then seal it, and then put that container in a larger container and seal it. And that way you're not getting the degassing and breathing in those chemicals at a small concentration. A lot of people don't realize that you have these really small concentrations of cleaning supplies and different chemicals in your home. Even though it's a small concentration in the air that you're breathing in your home, over time, because of the constant exposure, it's going to affect your immune system and the endocrine system. So it's important to detoxify your environment. drink filtered water, stay away from processed foods, and take zeolite. So please go to my store, the-studio-reykjavik.com. If you want a heavier detoxification protocol, take 10 small drops underneath your tongue and drink the filtered water. Do that every day until the bottle's done. Do that once or twice a year. I prefer to take the 3 small drops underneath your tongue, drink the filtered water, and do that every day throughout the year. So please go to my store, the-studio-reykjavik.com, get the zeolite. So a good stack. Help with your musculature and your bones and your skin with taking the collagen, and help with your immune system and your endocrine system, and detoxify your body by taking zeolite. Make sure you use discount 5 and you get $5 off any order.
Reporting on talks between the U.S. And Europe on economic trade.
So we're getting some detail now on what the US and EU agreed in terms of how they're going to trade with each other. Remember, the initial agreement came out a couple of weeks ago. Now we're getting details. So you're going to have that 15% US tariff on goods coming in from Europe, but there's going to be concessions on sectors. So like European cars, for example, European semiconductors, European pharmaceuticals, they will be paying a reduced tariff than they otherwise would have in terms of those sectoral tariffs when President Trump announces those. There may be a concession for European steel and aluminium and derivative products. That's conditional on the EU meeting certain conditions. For example, there's a line in there about ensuring that their markets ring-fenced from overcapacity. I think that's code for tackling cheap steel coming from China. There's also detail in there about cooperation on economic security, digital trade, food standards. So this is covering a lot of ground, and this is before we get, of course, to the big dollar agreements in terms of the EU promising to buy hundreds of millions of euro worth of US energy and invest hundreds of millions of euros into investment projects here. We didn't get too much detail on that. So there's a lot to get across, but the bottom line is EU and US are continuing to proceed along with this new trade agreement that they have.
And is there some kind of timeline for this? Because the preliminary deal, it was announced like a month ago. So how much longer, will this take, these discussions?
Well, there's a lot of detail, I think, still to be worked out. For example, we need to see how the steel tariff concessions, if they do get concessions, will shake out. For example, Lisa, I think in particular there's a lot of focus on the dollar value investments that have been promised. When will they begin to roll out from the European side? Where will they go? How soon will those projects get off the ground, for example? Now, on the EU side as well, they're promising concessions, for example, and allowing in more American seafood, more American farm produce, that type of thing. So there's a baseline agreement there that gets up and running pretty quickly. The 15% tariff rate's up and running, and it'll cover lots of merchandise goods. But there is detail to be worked out in these other sectoral tariffs and on the investment side of things.
And anything that's been left out or still be subject to tariffs that people might be interested in?
Well, the French wine, I heard your program mentioned earlier, Irish whiskey, not getting any concessions. That's going to be more expensive coming to the US, I think, as of now.
You just saw Paul's face drop.
Yeah, because I just over the last few years really gotten into the Barbaresco, the Nebbiolo grape. I'm doing my Italian thing here. I just have to go back to Pinot Noir coming out of Napa.
Which is not bad.
No, it's
not a bad trade-off.
And that's the reason why Paul Sweeney looks older than he is. Please go to my store, the-studio-reykjavik.com, and get the structural nanosilver soaps. You can get it in lavender and in peppermint. Very high quality structural nanosilver soaps. Also, you can get it in charcoal tea tree and in lemongrass. So please go to my store, the-studio-reykjavik.com, get these very high quality soaps, get a few bars for your household, help support the work that I do, and help support your health and wellness. It's a win-win. So please go to my store, use discount 5, and you get $5 off any order.
Story to mention is, on paper at least, there is some agreement here. They're moving in the same direction. And that's obviously important given both the EU and Washington are trying to keep a common course when it comes to bringing an end to that war in Ukraine. So net, you'd have to say it keeps the both sides on track. The alliance of sorts on track for now. It's probably in a better space than it was a few months ago, and President Trump is making some pretty fierce threats against trade with Europe.
And how united has the EU been in these discussions, negotiations?
Well, so the competence for trade lies with the EU Commission. So that's obviously a complicated thing for individual member states, because they all have their own individual asks. They all want to protect their own individual homegrown products and industries and factories. But it all has a funnel up to the top, and the EU goes at it in a kind of one-size-fits-all approach. So, it certainly can't be perfect, but clearly the EU has managed to hold it together. There has been criticism of their approach, as I mentioned. Why aren't they retaliating? Why aren't they fighting back harder? Should you have been more aggressive in their response to the US? But nonetheless, this is clearly the tack the EU has taken. They argue they've managed to maintain so far 15% tariffs across the board versus the threat of 30% that President Trump at one point was threatening. So, President Ursula von der Leyen this morning is claiming it as something of a win, or at least a stabilizing move for the EU. That's the approach they've taken, and they seem pretty content with it.
The deal could provide predictability and stability for companies and consumers and strengthen transatlantic relations. That's according to European Commission President Ursula von der Leyen. So we'll see if that works out. And thanks so much. We appreciate your reporting here, and current global economy reporter for Bloomberg News down there in Washington, D.C. So, the market's kind of coming off their lows, and we're pretty much just down about 5 points on the S&P. We were down much lower earlier, so we're clawing a little bit of that back. Coming up, Michael McKee, Bloomberg International.
Breaking news. Harvard to remove Black Lives Matter message from biology professors' office windows. See, you had professors pushing these liberal agendas. So it's about time that the university started getting their act together. Just for the ones that don't know, Yard Wars represents a multitude of reasons why I named it this show, all right? One is being on a football field, and it's based on yards, and it's the battle between man versus himself, man versus nature, man versus God, all right? And man versus man. There's this kind of like battle that's happening on the football field. That's one perspective. Another is Yard Wars with the shipyards ramping up naval fleets between the United States and China, because the war that's going to emerge in the Pacific is going to be a naval war. And Yard Wars also represents society in the United States, let's say Main Street, and the war that is happening in academia, in the yard of these Ivy League institutions. So there's a multitude of reasons why I called it Yard Wars. So it's important to cover some of the things that are happening at these elite institutions. And I think what's happening is that there's a pendulum that's swinging back to conservatism. There was this liberalism for the last 10 years or so that has been taking hold in the United States. Now, some people would say, oh, this has been happening a lot longer than that. But to make it simple, I think that there was a big swing the last 10 years towards liberal or ultra-liberal aspects in society, chipping away at the three pillars of God, country, and family. But I think that pendulum is starting to swing back to conservatism. But that pendulum is also swinging back towards nationalism, domestic production, being more wide-eyed with globalization and transnational capitalism. So this news about Black Lives Matter being taken, out of the window, I think is another proof positive of this conservatism that's starting to swing back and away from liberalism and towards conservatism. Now, will it be ultra conservative? Probably not. But there's change in the air in the United States. You're gonna start noticing it, and this is the main reason why I called it Yard Wars. So it's a little inside baseball, I guess. Now let's go to Gordon Chan talking about China and China's support for Russia sparks urgent warning.
Violence in Sudan has created the world's largest child displacement crisis. Of the estimated 12 million people,
Here now is Gatestone Institute Senior Fellow Gordon Chang. Gordon, good to see you. And you're raising China in a new op-ed. You say China is the biggest winner of the Trump-Putin summit. Why is that?
Well, China does not want to see the war in Ukraine end. And we know this because of Foreign Minister Wang Yi's conversation with Kaja Kallas on July 2nd. She is the EU foreign policy chief. And Wang Yi said that China does not want Russia to lose because if it does, then the United States will focus on China and East Asia. Well, if the war ends, however it ends, the U.S. similarly will be able to focus on China in Asia. So I think China is feeding this conflict with support for Russia, all in support, including troops in Ukraine, and it wants to make sure that the U.S. is kept off focus.
Yeah. So what can the U.S. do at this point to convince China that it is not in its best interest, if it wants to be a good actor on the world stage, it is not in its best interest to support Russia's war?
Unfortunately, I don't think we can appeal to Beijing's better interests. Beijing believes and defines its interests in a way which is very different than we think that the way it should. The only way that we get China to move in a better direction is to impose severe costs on China. And so far, the Trump administration has been unwilling to do that. On August 6th, they imposed an additional 25% tariff on India for buying Russian oil, but China buys more Russian oil than India does, and we have not imposed those tariffs on China. China looks at that and says that the United States is weak. Now, I don't agree with that, and I'm sure President Trump doesn't, but that's the way the Chinese see it, and that's important because that motivates them. And that encourages them to be even more aggressive with regard to Ukraine, trade, and everything else for that matter.
Yeah, I mean, that's why it's so difficult to try to understand where a trade deal is going. And President Trump has been very careful here. He shows what is possible in terms of his positioning on China, but then sometimes he backs off because he doesn't want a full-out World War III with China, because he knows we're so reliant on the Chinese supply chain. And in the meantime, he's trying to strengthen America to get the supply chains here. But so far, we don't have the specifics on how the trade deal changes with China. We're still in that temporary mode. We are, by the way, waiting on details between the EU and the US on the final details of the trade deal there. But let me get your take on these final arguments now underway in Hong Kong. This is for the trial of the pro-democracy media mogul Jimmy Lai. Of course, we've been among the few really covering this, and we keep a focus on it because it represents all that China has done to squash free speech. A lawyer representing Jimmy Lai said this: "It's not wrong to support freedom of expression. It's not wrong to support human rights. It's not wrong to try to persuade the government to change its policy, nor is it not wrong to love a particular administration or even a country, because you can't force someone to think in one way or another." Jimmy Lai faces life in prison if convicted under a national security law imposed by Beijing after anti-government protests happened in 2019. Jimmy's son and Free Jimmy Lai campaign leader Sebastian Lai was with me just last week. He told me there's no chance his father is going to get a free and fair trial this week. Watch.
He's not going to get a fair trial. There's no chance of a fair trial. I think anybody seeing the length of this trial, the conditions of this trial, knows that it's completely politically motivated. My father is in jail in Hong Kong for essentially courage, because he decided to stand up for freedom and democracy and stay and defend his journalists. So, there's so much at stake in this trial. All the freedoms of Hong Kong are being put on trial, and there's just no chance that he's going to get anything close to a fair trial.
Gordon, what's your reaction?
Sebastian Lai is right. This trial shows the evil nature of the Chinese regime. And by the way, the people in Taiwan must be looking at this because they see the way China has treated Hong Kong, and that's the way that China would treat Taiwan or any other country. This is a real important issue. We've seen the inhumane treatment of Jimmy Lai in prison. We've seen the intransigence of both Beijing and Hong Kong. Now, I'm sure that Beijing does not want to see Jimmy Lai die in trial, in custody, because if that were to occur, he'd become even more of a martyr, even more of a symbol that he already is. But unfortunately, you have the Hong Kong government. This whole trial feeds into their national security narrative, the one of John Lee, the chief executive of Hong Kong. And so there is going to be a very difficult time for Jimmy to try to get him free. And President Trump deserves all the credit for actually talking about Jimmy Lai's predicament in custody.
Yeah, he has been so smart on the China relationship. But Gordon, I mean, what do you make of this headline that I just read a moment ago, that Russia has launched a massive aerial attack on Ukraine, including 574 drones and 40 missiles this morning? We're confirming details of this, but how is this acceptable? After President Trump went all the way to Alaska to meet with Putin, the Europeans went all the way to the White House to talk about this, and now we're back at it. Russia is back at it on Ukraine, and China is back at it supporting. I mean, what can be done?
Well, what can be done is that we cut off all the flow of money to Russia. No oil sales, no sales of anything else, because if there's no money, there's no war. And this war stops really quickly if we are able to not only increase our sanctions, but enforce them, because we have not been enforcing sanctions to the extent that we should. So really, this is an issue. Putin is not going to change. This is Putin's operation. He's he's the war criminal of the 21st century. And so we've got to realize we can't entice him into good behavior. Unfortunately, we've just got to defeat him. I know that's politically unpopular, but the problem is if we don't defeat him, if we leave him in possession of Ukrainian territory, we open the door to war in East Asia, because China then thinks it can grab territory from neighbors and keep it. So there's a lot on stake here. It's not just Ukraine. Right. This is the future of Asia.
Right. All right.
That's why
Get your take as always. Thank you, sir.
That is why I keep on saying the ball is in Asia. We have to focus on the Pacific theater, not the European theater. So the faster we solve the problem in Ukraine, the better off the United States is to be able to focus on the Pacific theater. And we have to have a stronger stance that, territorial integrity is important. Please go to my store, the-studio-reykjavik.com, and get the drops and the lozenges. Very high quality, and you're going to need them for the fall and the winter season. You're going to start hearing a lot of people having razor throat, right? So it's really important to mitigate the problem right away. So I have the drops in blueberry, in cherry, and also in honey and lemon. Get 100 in each bag. Get a few bags for your household. The drops are smaller than the lozenges. The moment you have that irritation, take it right away to mitigate the problem. I also have elderberry zinc in stock. Lozenges, 21 in each bag. The lozenges are larger than the drops. Get a few bags for your household, use discount 5, and be prepared. In addition, C60, it's the second pillar of my anti-aging protocol. It's a very potent antioxidant, 1,000 times stronger than vitamin C. One molecule of C60 is 1,000 times stronger than vitamin C. Now, you take a teaspoon a day, preferably on an empty stomach for best absorption. You can get C60 in avocado oil, extra virgin olive oil, or MCT coconut oil. Now, you take a teaspoon a day. C60 has to be in an oil. It's lipid soluble for proper absorption. What that's going to do is it's going to soak up free radicals in your cells and in your tissues, bring down stress in that cell and tissue, so the tissue and cells will perform better. Your mitochondrial health will improve. You'll have more ATP. Your immune system and your endocrine system will improve. Your cardiovascular system will improve because you're soaking up free radicals at the vascular level. You're reducing the chances of oxidized LDL, so you're reducing plaque formation. In addition, your neurons are going to improve. Why? Because by bringing down stress in the neuron and soaking up those free radicals, the mitochondrial health of those neurons will produce more ATP. You'll be able to produce the neurotransmitters that you need, and it'll allow for that chemical electrical signal to take place. So your neurons are going to communicate better. And when you have better communication, you'll have positive neuroplasticity. That means you'll be able to think faster. You'll be able to consolidate memory. You'll be able to retrieve that memory. Super important. And by bringing down stress in the neuron, you're maintaining the myelin sheath. So it's super important for neural health too. But it also helps with the dermal layer in your skin. So when you take C60 on a regular basis, a teaspoon a day, you're going to start noticing over a year that you're actually a lot younger looking. You feel better. Your body is healing because you're soaking up all those free radicals. Now, if you soak up free radicals a lot of different ways, like through glutathione from NAC, by taking C60, by taking resveratrol, taking vitamin C, taking the barley that I have, these are all ways to soak up free radicals different ways. But the most potent one that you can purchase is the C60. So please go to my store, the-studio-reykjavik.com, get the C60. You can get it in a 2-ounce, a 4-ounce, or an 8-ounce configuration. I've been taking C60 since 2016. And you'll start noticing that other things with your body are improving. For example, your immune system and your endocrine system, even your eyesight. So please go to my store, the-studio-reykjavik.com, soak up those free radicals. A buildup of free radicals is a major part of the aging process. So if you soak those up and you reduce the negative effects of free radicals, then you're aging slower. So please go to my store, the-studio-reykjavik.com. Use discount 5, you get $5 off any order. You can get it in a 2-ounce, a 4-ounce, or an 8-ounce configuration. It is cheaper to buy a higher ounce configuration. If you spend $100 or more, you get a free gift until supplies last. Follow my protocol, it's gonna help you. And what's that protocol? It's simple. Foundation, the multivitamin, and the probiotic. The first pillar, max 35 or cleanse, or max 14. That's gonna help to boost up your immune system. The second pillar, the C60, soak up those free radicals. The third pillar, turmeric, ashwagandha, and lignans to boost up that immune system and help with your cardiovascular system. And the fourth pillar, boomer boost to rev up your metabolism and boost up your energy levels. And if you pay attention to what I just said, those are all the major vectors to stop aging. So please go to my store, the-studio-reykjavik.com. Now, if someone says, well, just take one vitamin and that's going to help you. Most likely not. All right. The reason why is your body chemistry, your biochemistry is complex. And there's lots of intermediates, and there's feedback loops, and there's positive and negative feedback loops, and has lots of ingredients. So if your body, through millions of years of evolution, all right, thought that all you needed was, one type of ingredient, the body would have figured that out. You need lots of different ingredients, and the way they stack together, that's more reminiscent on how your body chemistry works, your biochemistry works, okay? So just pay attention to the protocol, it works. It's very comprehensive, and it's something that I do every day. So please go to my store, the-studio-reykjavik.com. Alrighty. All right. I'm gonna go to and do this initial jobless claim.
Same old phone? Nah. Upgrade to the new Galaxy Z Fold 7.
Did I sign here?
No.
Joining us right now is Priya Misra. She is fixed income portfolio manager at JP Morgan Asset Management. And Priya, let's weigh through everything you just heard from these two, what you saw with the numbers. What does Jay Powell say tomorrow? How does he tee all of this up?
So I think the Fed as well as Jay Powell have a really tough job ahead because the dual mandate is intention. Right? There's inflation is not at their target, and there's inflation pressures with tariff. Even service inflation is higher than where it should be. So you've got that inflation conflict or above target. You get a job market, which, I know that the claims did pick up, but overall, we think we're in a low fire economy. There's big questions. How much of this is cyclical versus structural? We don't know actually how weak the labor market is. So if I were Jay Powell, I don't commit to anything because there's another payroll report, there's another CPI report before that September meeting, and sort of leave it to the data. Let the market reprice based on the data rather than the Fed's reaction.
That's an excellent point that we have another data point. We are used to getting this Jackson Hole readout from the Fed to say, what are we really teeing up for the next 6 months to a year? It may be a time to step back, but if he does that, if he doesn't jawbone and talk the market's expectations down, you're going to see a much bigger reaction in the markets if they get surprised by no rate cut come September.
I don't think he'll take it off the table either. I mean, the one thing where he can maintain the easing bias is to talk about the fact that interest rates are restrictive. And I think the majority of the Fed believes that somewhere in the 3% would be neutral or running at 4.5%. So this idea that the easing bias remains when they feel better about inflation and inflation expectations, wages, all of that allows them to cut, they'll cut. I think if they keep it in the horizon, you may not get as much of a reaction. And I think he's going to say, well, if the data requires it, we'll cut. I think that can keep the hope alive. There may be some disappointment tomorrow, though.
I know, Priya, that you're a fixed income manager, so you're looking at the bonds market's reaction to all of these things. But I know you have to be thinking broadly about what's happening with the economy, too. The big question that keeps coming back is the consumer slowing down? Is there potential for an economic slowdown or even a recession on the line? What do you think? That has to be the basis for any other decision you're making.
Great question. And the data has been volatile, right? You have that one labor report which moved the market as much. So we take a step back. Let's look at the trend. The trend over the last 6 months is things are slowing down. The consumer is slowing. We look at, whether you look at real consumer spending or you look at PTFP, that's our favorite measure, it's the private domestic sales. You take out inventory, take out government, take out net exports. It's
that
slowing,
is a good number.
right? Yeah. But it is slowing, it's not falling off a cliff. So what we're calling this, is this a soft cliff? I was an equity person, I call it a soft landing. Bond people call it subtrend growth. What is that? 1.5% GDP. It can allow the Fed to cut a little bit, maybe get to neutral, and not a whole lot more. We don't need accommodation. That's how we see the economy slow down. But I will say we came into this year with very strong consumer balance sheets and corporate balance sheets. And it's been impressive that earnings have generally held up. The one caution would be prices have not gone up that much. And so as tariffs have to be paid, so far the companies have taken it. Do they start to pass it on? That will be the real test. Can consumers continue to spend as prices go up? And we think there may be some slowing there, which will allow the Fed to cut.
For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/. The stock's headed for the 5th straight day of losses. This comes after Walmart posted a rare profit miss. In addition, jobs claims that came in higher than expected, indicating some further weakness in the labor market. Some strategists are also worrying that markets are overly confident in their expectations for a rate cut. If Fed Chair Jerome Powell pours cold water on those expectations, and he's set to speak tomorrow, Jackson Hole, then look for a market sell-off. Meantime, John Stolfus at Oppenheimer sees opportunity following the recent market sell-off.
Don't just buy you don't want to buy the dips just blindly. You want to look for babies that get thrown out with the bathwater. For intermediate and long-term investors, very interesting time, I think, to see things like that. And for traders, in any turbulence, that's where they make their money.
Among the other pieces of data that we got this morning, manufacturing in the U.S. expanding at the fastest rate in more than 3 years on stronger demand. Now, that's also fueling some inflationary pressures. That's why we're seeing yields higher. The 2-year, which is more policy reactive, is up 3 basis points right now. That's at 3.78. And the 10-year, also 3 basis points higher. That is at 4.32. And among the stocks on the move, shares of Walmart, as we mentioned, right now 4.3% lower. Overall, the S&P 500 down 19 points. That's a decline of 0.3% at 63.76. The Dow Jones Industrial Average down 164 points. And the Nasdaq 100 is 69 points lower. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash, Lisa and Paul.
Thank you, John Tucker. And John's been talking about it, right? The retail earnings from Walmart. Out of the gate, it sounded good. They raised their full year sales guidance, but it missed on the bottom line. And shares are down about 4%. So here to give us more details on that is Jennifer Bartasha. She's Bloomberg Intelligence Senior Analyst, Retail Staples and Packaged Foods. Jen, welcome to the show. Were the expectations just a little bit too high coming into the print? I mean, what happened?
Well, when I look at this quarter, it really is it's really more about one-off kind of things that were unanticipated. And so I don't know that there's any way the street really could have anticipated, higher costs related to, having to hold money back for settling claims. So if you look at the quarter on paper, it was actually a pretty good quarter, especially in a very volatile background that we have.
What are they saying about the consumer, the health of the consumer, Jen? Because nobody has a better finger on the pulse than Walmart.
Very true. I mean, when you look at the health of the consumer, Walmart is definitely capitalizing on whatever willingness there is to spend. I think one of the very interesting takeaways from the results today is that in Sam's Club, everything was driven by units sold, and in Walmart US, their traffic was up and their ticket was up. That means that Walmart is really unique across other retailers in terms of selling greater volumes, which really means that they're bringing more and more people into that ecosphere. And they did call out higher income households as one of those biggest contributors.
Now you're comparing, to Walmart to, let's say, a Sam's Club. What about Walmart to a Target as far as how tariffs affect them? I mean, do tariffs affect Walmart differently than they affect Target?
Well, I would argue that Target actually has a little bit greater exposure to tariffs than Walmart, and that's simply because, as Paul knows, Walmart is the biggest, grocery retailer in the United States, and it takes a big chunk of their revenue. And Walmart imports as a result a little bit less. That said, I think one of the other differences is Walmart has doubled down on improving the quality and the assortment in their general merchandise. And one of the things that they called out today is that they're seeing market share gains in things like apparel and fashion, which are traditionally the areas that Target has excelled at. So that's also an interesting takeaway looking at the two retailers between yesterday and today.
What do you think here going forward, Jen, these retailers will try to do with any tariff-induced cost increases? Are they going to take as much as they can in the margin before passing on to the consumer, or how do you think they're going to do that?
Well, I think in order to preserve value perception is really important, and that's what's going to help you retain market share. So I think price increases will be a last resort, but the impact of tariffs has been very gradual, and I think what we're going to see is as we get into second half with all of these retailers, the inventory they currently have on hand, much of which they accelerated to get in ahead of tariffs, is now being sold, and it's being replaced at higher cost. So we're seeing inventory go up basically off of the cost of inventory itself, and how well they sell that through without having to do markdowns and without having to absorb too much cost is really what's going to be critical. I do think margins are going to be pressured a little bit more in the second half because of that, and because that they are going to have to take some strategic price increases where they can. They're just going to be very targeted in where they do that.
Jen, can you get into delivery and e-commerce? Because that has been a big help for Walmart. I mean, would it eventually give Amazon some competition? Where does it stand there?
Well, I think one of the big competitive advantages for Walmart is the stores and the proximity to people's houses. So the ability to deliver quickly and to people's homes on a same day or a few hours basis is really a competitive advantage that they have. E-commerce is growing at an incredibly healthy clip for Walmart. And as a result of that, we're seeing the higher margin businesses like digital advertising really grow as well. And that also helps strengthen and shore up the overall financial position of the company. So that focus on expanding digital sales, I think, will continue. And they're really executing well on those strategic objectives. And I think we'll see a lot of that type of focus as we get into the end of the back to school season and into the holiday season.
All right, this is Walmart we're talking about, Jen. Why can't they just raise prices 5 to 10% on light bulbs and whatever? I mean, where am I going to go if they do that? I mean, it's Walmart.
Well, it is, but I mean, their culture is steeped in being the lowest possible price provider. And so, I think that part of the reason they've been able to gain market share in recent years, as we saw very high food inflation, is that they're really focused on preserving that price gap to other competitors. So you're right, Paul, they could raise prices by 5%. And Walmart does raise prices when it's needed. We saw prices go up during the period of food inflation. But they're also one of the fastest to take prices back down when they can. And so I think that they've got a team of merchants who are very skilled at deciding when and where they need to take price. And because they sell such a broad variety of categories and items, it doesn't have to be a uniform price hike across the entire company.
In the last minute or so we have here, can you just explain how they keep their prices so low? I mean, how are they able to do it? I don't get it.
Well, there's a self-fulfilling cycle in retail, which is that as you sell more units, you get better prices when you're buying them, right? Because you're selling higher volumes. And so Walmart has really gotten into that cycle where they're selling such big volumes that they're able to procure even better purchasing terms. And so that definitely helps them with the ability to keep prices level when other competitors who may not have the benefit of that type of cycle are having to pay slightly higher costs.
Jen, thanks so much. Appreciate it. As always, Jen Bartash, Senior Retail Staples and Packaged Foods Analyst. She's down there.
Please go to my store, the-studio-reykjavik.com, and get the Structural Nano Silver toothpaste. This toothpaste has no fluoride. It's very high quality. It's going to whiten your teeth, freshen your breath, help with your gum line health, reduce inflammation. Super important. Very high quality. No fluoride in this toothpaste. So please go to my store, the-studio-reykjavik.com. Get a few tubes for your household. Very high quality. I also have gels in stock. You can get it in tube form or in the quick dispenser. Very important. Be prepared. I suspect that during the fall and the winter, there's going to be an issue and you need to use this. If you're not feeling well or someone around you is not feeling well, put it on your hands, around your mouth, around your eyes, around your nose, around your ears. Lightly coat your nostrils. It stays active for 5.5 hours. You can also use it as a daily skincare. You can use it as an aftershave. It'll help to heal wounds, cuts, and abrasions much quicker. Why? Because it keeps it clean. So it's a dual purpose. So please go to my store, the-studio-reykjavik.com, and get the gels, either in the quick dispenser or in the tube form or both. Have some at work, have some at home. Be prepared. You never know when you need it. And again, you can use it as a daily skincare. I also have very high quality deodorants. These deodorants are made from essential oils from the Himalayas. There's no aluminum, no baking soda. It's all natural. These deodorants are for males and females. You can get it in peppermint, lavender, and tea tree, or in citrus. I prefer the citrus, but that's just my preference. But please go to my store, the-studio-reykjavik.com, and get the deodorants, and they're dual purpose. You use it as a daily deodorant, but it'll help to detoxify your body. And detoxing your body on a regular basis is super important. So please go to my store and get the deodorants. Use discount 5 and you get $5 off any order. Another great supplement that I have that's dual purpose is olive leaf extract. Olive leaf extract will help boost up your immune system and help with your cardiovascular system. It brings down inflammation. By bringing down inflammation is boosting up your immune system. By bringing down inflammation at the vascular level, you're reducing plaque formation. By bringing down inflammation at the cerebral level, you're maintaining the health of your neurons. Super important to take. Also, olive leaf extract helps your lipid profile, helps to bring down LDL levels and increase your HDL levels. So you're reducing plaque formation. So please go to my store, the-studio-reykjavik.com, and take the olive leaf extract. Again, make sure you use discount 5. You get $5 off any order. If you spend $100 or more, you get a free gift until supplies last. Let's listen to Rick Santelli.
This is definitely the most important data of the morning. Watch yields firm up here. S&P Global, these are the PMIs in manufacturing and services and include the composite. They're August preliminary. In a couple of weeks, we'll have better reads, maybe more precise, but these are nice. We're expecting a number under 50 for manufacturing not to be. 53.3. That is the best since May of 22. It reverses a sub 50 read that we had. Obviously, it's not only, it's the best since 22, it's by far the best of the year. And if we look at the services, well, the services is the only one out of the 3 that isn't sequentially higher than last month, but it's still solid. 55.4, that's the best since Dece of 24. So obviously it's the best of this year. And finally, the composite. This is really nice. 55.4, 55.4, exactly the same actually as the services. This will be equal to where we were in December of last year, but to find a higher read, you're going back to April of 22. So these are very solid readings. Interest rates moving up just a smidge. Do remember that 430, 429 is settlement. So as we sit here, whisper under 432, we're up a couple of basis points. We still have existing home sales and LEI to come, but this really is a reading to pay attention to, especially with that service number is solid as it is. Squawk on the Street will return.
Yeah, let's go back to Bloomberg here.
I don't think so. That's been the problem really for the last 4, 5, 6 years, in addition to home affordability. Let's check in with Drew Redding. He's a home builder analyst with Bloomberg Intelligence. Drew, talk to us about the existing home market. Where are we today? Where are we relative to historic levels? What's going on out there?
Yeah, so the data that came in today was a little bit better than expected. We're still down about a percentage point from last year. But as you mentioned, the existing home market is just frozen. We're about 25% below a normalized level, which is somewhere around 5 million. It's the usual suspects. It's affordability. Prices are up in some markets 50% from 2019. Rates have been volatile. As you alluded to earlier, we had the mortgage rate lock-in effect, which has lessened a little bit, but you have more than half of homeowners with a rate below 4%. So the incentive for them to trade that in for, as you said, something in the 6.5% range just simply isn't there. And then what we've had this year is a lot of uncertainty around the economy, around prospects for future employment. So there's really a lack of urgency out there in the market. Now, we've been hovering around this 4 million annualized rate for a couple of years now. And given what we've seen with rates, concerns over recessions, I guess if you want to call it good news, is that we think this is probably the trough levels. Now, that doesn't necessarily mean that we're going to be off to the races the next couple of years, but perhaps the worst of the market is behind it.
Well, what about inventory? I mean, are there more homes on the market? I mean, is that improving at all?
Sure. So as you know, the lack of for sale inventory has been a huge story within the housing market over the last year, primarily during the pandemic. But over the last couple of years, more recently, we've seen inventories rise, call it 15 to 20% year over year. If we step back a little bit, we're still, depending on which index you look at, about 15 to 20% below 2019 levels, which was kind of a more normalized pace. But I think that when you look at the national data, it really masks what's happening at the local level, which is more important for housing, as you know. And we've got about 11 states where inventories are now higher than they were in 2019. And if we look even a little bit more granular, if we look at the top 50 home building markets, more than half of them have inventories that are higher than 2019. In some cases, it's pretty significant. If you look at what are the most important markets for the builders, every major market in Texas, Florida, and the Southwest and the Northwest have inventory above 2019 levels. The only markets where it's really still in check are the Northeast and the Midwest, which tend to be less boom bust, which is why you're seeing a little bit more stability. We're also seeing that on the price front.
When those markets, Drew, where you do have that higher than 2019 levels inventory, is that resulting in material declines in the price of the homes? Can I get into something in Florida and Texas at a discount here?
Yeah, good question. So home prices at the national level are still increasing. We're seeing the pace decline, but if you look at the top 50 markets, about 16 of those top 50 are actually seeing year-over-year price declines, and about half of them are actually underperforming at the national level. As you mentioned, it's primarily in Florida, it's in Texas, it's in California. So markets like Tampa, Orlando, Jacksonville, prices have certainly come down, which is making the market a little bit more affordable. That being said, if you look back where we were just a couple of years ago, prices are still pretty elevated, but they are improving.
I gotta ask you a question because someone asked me and I was like, I don't know. I have Drew here, so let's ask Drew. Existing home sales, okay, so what about used homes that are knocked down and then a new home is built on the property? Does that count as a new home or a used home?
It's a new. It's a new.
How does that work?
Yeah, that would be accounted for in the housing starts data as a new home. I mean, knockdowns and rebuilds are still somewhat of a smaller part of the market.
Not in the Jersey Shore, they're not.
Yeah,
all right, let's talk about the mortgage market in general, real quick, 30 seconds. Is there a rate now where people are going to say this is the new normal and I just got to man up and buy this house?
Look, I think we're somewhere around the new normal now. I think the biggest thing as it relates to mortgage rates is we need to see stability. We're at about 6.5% now. I think if we got into the low 6, high 5% range, that would bring the marginal buyer back. But what we really need to see is rates remain stable so buyers can get some insight into what their payments are going to be when they're out shopping for a home and have the confidence that they know what their payments are going to be.
All right. I mean, when I bought the Jersey Shore compound, 6% was my mortgage. It felt like a total,
You're
schlub.
doing pretty good.
Now I'm like, Mr. Real Estate here. Drew Redding, thank you so much. Appreciate it. Drew Redding is a home building analyst with Bloomberg Intelligence down there in Princeton, New Jersey. He forgets where the New Jersey Transit train is. Get into New York, but that's okay. He's got it wired.
Please go to my store, the-studio-reykjavik.com, and get the turmeric. Turmeric will soak up free radicals because it's an antioxidant. Turmeric will also bring down pro-inflammatory cytokines, bring down inflammation. Super important for your vascular system, for your immune system, also for your brain. Lignans will help with your endocrine system and your immune system, bring down inflammation, and soak up free radicals. Again, you get the same benefits from turmeric, but by stacking them together, you get a synergistic effect. Ashwagandha root helps to control cortisol levels and blood glucose levels, brings down that inflammation, and helps with the immune system and the cardiovascular system. So stack these together. This is the third pillar of my core protocol. So get the turmeric, the lignans, and the ashwagandha, stack them together, use discount 5, improve your immune system and your cardiovascular system, and there's an added benefit. You're helping your neural health. How? By bringing down inflammation at the cerebral level and improving your blood flow, you're creating an environment for positive neuroplasticity and to maintain the myelin sheath of your neurons. I can't tell you this enough. Within 5 years, you're going to know a lot of people that have early onset of dementia, so you better start paying attention to me. If you don't prepare, you will get affected. The probabilities are increasing of early onset of dementia. Now, there's a multitude of reasons for this, but you can mitigate the problem by bringing down inflammation. So please go to my store, the-studio-reykjavik.com. Use discount 5. You get $5 off any order. If you spend $100 or more, you get a free gift until supplies last. Or don't listen to me, and don't be surprised that you have problems within 5 years.
billion deal. That's nice. Jeffrey Cleveland, chief economist of Payton Regal. He's going to give us his outlook for the U.S. economy. And then Jen Reed, Bloomberg Intelligence senior litigation analyst. Talk to us about this potential tie-up in the TV business, Tegna and Nexstar. I think the regulators are going to want to look at this thing. I don't know. They're putting these TV station groups together. I'm not sure how that's going to fly, but Jen will know it at all. Right now, let's kick this hour off with John Tucker and Bloomberg.
All right, guys, this Bloomberg Business Flash has been brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Stocks right now headed for their 5th straight day of losses. You have 6 of the 11 major industry groups in the S&P 500. They are lower right now, being led lower by consumer staples, and that is home to Walmart. They delivered that profit miss, and the shares right now down 4.3%. Take a deeper dive into that in just a minute. The data today, we saw applications for unemployment benefits rising to their highest level since June. Some more indications of weakness in the labor market. Then you had data on manufacturing. That's expanding at the fastest pace in more than 3 years. And it's also seen as inflationary, which is why we're seeing bond yields climb. The 2-year, which is more policy reactive, that is close to 4 basis points. Meantime, Matt Bailey at Miller Tabak says stocks are still too expensive.
That's just surprising to me that people are even calling this a great buying opportunity when the market is still trading at 22 times earnings, 3 times sales, 5 times book, 5 times book, and we've seen such a mild pullback. I just think the odds that we're going to see something deeper are much higher than the street looks for.
The S&P 500 9 points lower, 63.86 on the index. The Dow Jones Industrial Average 96 points lower. The Nasdaq 100 right now is down 24 points. Oh, price hike. Sony raising the price of PlayStation 5 to $550 from $500. Of course, this follows price hikes by Microsoft and Nintendo. The tariffs, you can blame them, increasing the cost of imports. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Lisa and Paul.
I paid $700 for my son's video game console, the Xbox, whatever it was.
You got ripped off.
I guess I got the higher end version. What we do for our children. Okay, let's take a look at some of the stocks on the move today. Lisa Mateo, Paul Sweeney. We are joined right now by Natalia Knjavich. She is going to talk about some of the stocks on the move. So I want to start with, of course, Walmart. We've been talking about it all morning.
Exactly. So Walmart shares are down by 4.3%. The ticker is WMT. Profit missed expectations for the first time in 3 years. However, it wasn't a huge miss. Adjusted EPS was just 6 cents lower than what analysts expected. And the main reason, the company said, was an increase in insurance claims, legal charges, as well as restructuring costs. However, CEO said that charges are expected to moderate later this year. Of course, meanwhile, by the way, Walmart also raised full-year sales guidance. Of course, everyone was looking for any commentary about inflation and prices, and the management said that the impact has been limited so far. Prices rose about 1% in the U.S. during the quarter.
Cody,
another.
I think this, what is this, like makeup and stuff?
Beauty, fragrance.
Yes. Perfume.
You have to invest in your face, you know, guys.
Oh,
You
yes.
have to invest in your face.
Thank you, Paul.
Exactly, guys. So the ticker for this stock is COTY, and the price, the shares dropped by 21%. I'm checking the size and scope for this. This is the biggest drop since 2020. So we saw that sales fell 9%, the most in 4 years. The company also said that it expects a slowdown in sales to continue. And then in the current quarter, sales across existing business units it said that will fall between 6 and 8%, but consensus expectations were for about 2.6% decline, so it's a huge miss. Of course, CFO said that yes, retailers are more focused on inventories right now. Consumers are cutting costs on discretionary items. Bloomberg Intelligence analysts are saying that return to sales and profit growth at Coty is delayed until fiscal second half of 2026. And I have to point out one takeaway. We saw that sales for high-end fragrances that include Gucci or Burberry, they were higher. So just another evidence that low-income consumer are spending less, but high-income consumer are still kind of shopping.
Gotta get your Gucci. Okay. CoreWeave, the last one.
The last one, yeah. So the ticker for this one is CRWV. Shares are up by 2%. This came after two analysts at Arete Research and HC Wainwright upgraded the stock. They see selling pressure decreasing. They see more opportunities for growth. One of those analysts specifically cited contracts from OpenAI and Google, which could present more opportunities for growth. But keep in mind that last time when the company reported earnings on August 12th, the stock was under pressure because many analysts were concerned about widening loss and disappointing earnings outlook. And there are also many concerns about potential, margin pressure for this company as it has to spend much more in order to, meet demand from big AI spenders.
All right, Natalia, great stuff. Appreciate it. Natalia Kenny-Javich, equities reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. Let's head out to Jackson Hole, Wyoming. Elk, bison. I've seen it all. That the old geyser. I saw that. That was pretty cool. Lisa Abramowitz is out there. She is Bloomberg Surveillance co-host. And Lisa, thanks so much for joining us here. Wait, people are really keen on Fed Chairman's speech tomorrow. What's the feeling out there in Jackson Hole about how he might proceed?
I will just say, before I get started, Paul, that there was a flock of elk or a herd of elk, whatever you want to say, earlier this morning, and everybody was watching them. So you are right to point out the elk as well as the moose and some of the other animals out there. Look, everyone is wondering a couple of things. First, will Fed Chair Jay Powell focus on one side of the dual mandate for this central bank, the idea of inflation on one hand? We saw that in the flash PMIs from S&P this morning. We saw that in Walmart's earnings. On the other side, jobless claims came in just a little bit elevated, and ongoing jobless claims really have risen to the highest level since 2021, a sign of weakening on the labor front at the same time that you have pricing pressure, the stagflation. How do they address that at a time where, of course, this is the other issue, the political pressure around this central bank? How much do they address that? How much can they ignore that? And how much does that really influence the tenor of the conversation, maybe not in public, but certainly, Paul, in private?
And Lisa, also in the spotlight, Fed Governor Lisa Cook, I'm sure a lot of people there talking about it. President Trump called for her to resign, accusations of mortgage fraud. I mean, you're in the middle of everything. Is this just more fuel to the fire over the Fed's credibility as basically an institution independent of the White House?
Lisa, it's interesting, and I'm going to quote by my reputed colleague, Michael McKee, who this morning said he doubts that Lisa Cook was the first person that they looked into and tried to figure out what happened in their mortgages, right? It probably has been this scrutinizing of the entire board of governors to try to understand what could give the president cause to fire one of them and to remake the board of governors. So that is sort of the tenor of the way people are talking about it or not at Jackson Hole. Whether that's legitimate or not, people can make those arguments, but that's certainly not a focus of conversation. A key question is a focus. Let's say the president does get his wish and he does get to appoint a significant portion of the board of governors. What do they do? Do they cut rates by 150 basis points? Well, won't the market protest? How much is this a market that bond vigilantes are going to control more than any 7 members of a board of governors? So this, to me, really is one of the key questions. How much control does a Federal Reserve have over long-term interest rates at a time where the market's going to have its vote, and the market is voting loudly? And we saw that last year with 100 basis points of rate cuts, leading to $100
basis point increase in yields at the long end. So you put these things together, it is a complicated economic backdrop. It is a complicated political backdrop. And right now you're seeing Fed members here trying to navigate that while also focusing on these big academic issues like how the labor market is changing and artificial intelligence.
All right, Lisa, thank you so much for joining us. That is the Lisa Abramowitz, Bloomberg Surveillance co-host, my former running buddy here on Bloomberg Radio. She's out there in Jackson Hole, and she'll be there with Tom Keene and Michael McKee tomorrow, 9 a.m. Eastern Time for 2 hours, and they'll be covering the speech.
Please go to my store, the-studio-reykjavik.com, and get the vitamin B complex. If you're 40 years of age or older, you should be taking vitamin B complex. Why? The first 4 B vitamins in this complex will help with your electron transport chain so you can boost up your ATP levels. They'll help the health of the mitochondria. Vitamin B complex helps with cellular metabolism. When you get older, your metabolism starts to slow down. And that's how you age faster, and you start gaining weight and all this stuff. So if you speed up your metabolism, you're actually going to perform better in terms of weight loss, in terms of building up musculature. Your tissues will perform better. Vitamin B complex will also help with your neural health. Vitamin B12 is super important to protect neurons. So go to my store, the-studio-reykjavik.com, and make sure you get the vitamin B complex. Resveratrol, something I've been taking for decades. It helps with youthful gene expression, helps soak up free radicals, helps the health of the mitochondria, boosts up energy levels, gets rid of cells that are in senescence. So please go to my store, the-studio-reykjavik.com, stack it with C60, NAD+, ubiquinol, clarity factor. Very powerful stuff. You get the max benefits of resveratrol when you stack it. And goodnight formula, super important to take so you can get into 3 to 5 cycles of REM sleep and deep sleep so you can detoxify your central nervous system, consolidate memory, and be well rested. Chronic sleep deprivation will lead to early onset, increases your chances of early onset of dementia. So it's super important to get good sleep. This has tryptophan, melatonin, GABA, and passion flower. Take it every night, and you're going to be able to consolidate memory and to detoxify your central nervous system. Super important. And by doing that on a regular basis, you're slowing down the aging process. So a great stack would be to take the Goodnight formula to help with your brain, resveratrol for youthful gene expression, and vitamin B complex for neuroprotection and boost up those energy levels and rev up your metabolism. So please go to my store, the-studio-reykjavik.com, get the Goodnight formula, resveratrol, and vitamin B complex. Another great stack is the following. Heirloom barley. This will help to detoxify your body, bring down inflammation, and soak up free radicals with superoxide dismutase. This is a high-density protein. You take a scooper a day, mix it with soft foods, filtered water, a smoothie, or even with milk, but take it every day. By bringing down inflammation, you're helping with your vascular system and your immune system. You're helping with your brain function. Because if you have high inflammation at the cerebral level, your myelin sheaths and the neurons aren't as healthy. So it's really important to take every day. Now, another great supplement is the digestive enzyme complex. This is going to help to reduce the load on your pancreas. You take it every day to help digest your carbohydrates, proteins, and lipids. When you do that, you're going to digest your foods easier, less load on your pancreas, and that way you're getting the energy that you need from the food that you take. Now, if you're an athlete, younger or older, you would benefit from digestive enzyme complex also by being able to digest your pre or post-workout fueling. So if you're an athlete, take this. If you're 40 years of age or older, make sure you take this. Super important. I don't care how healthy you are. As you get older, your pancreas doesn't work as well. So please go to my store, the-studio-reykjavik.com, get the heirloom barley, detoxify your body, bring down inflammation, soak up free radicals, and get the digestive enzyme complex to help break up carbohydrates, proteins, and lipids and bring down the stress and the load on your pancreas. This also has bromelain in it, which is fiber analytic. So please go to my store, the-studio-reykjavik.com. Use discount 5. I want you to get healthy. I'm trying to give you all these different ways to do it and to provide it in an affordable way. The power to what I'm saying is to stack it so you get the max benefit. So please go to my store, the-studio-reykjavik.com.
On average, 8% application overall software universe, and application software is down 12%. And it's this AI risk that's really clouded. Are they going to be able to sell their software at the same pace and the same dollar level, or is it going to move and migrate to an AI agent, which is going to be doing the software function?
Niraj, in the last minute or so we have here left, is this one of Thoma Bravo's biggest deals?
No, I think over the last couple of years, yes. Okay. It is definitely one of their biggest deals, and they're not paying so much relative to some past deals that were in the 7 to 8 times in the software space.
Niraj, thanks so much for joining us. Niraj Patel, Senior Software Analyst, Bloomberg Intelligence, down there in Princeton, New Jersey, and a nice trade. And what do I do when we're talking about an M&A trade? I'm going to see who's getting paid here. I think it was JP Morgan and Goldman Sachs representing Thoma Bravo, which makes sense because that's private equity and that goes to the big boys. And Evercore did the seller here, and yet generally speaking, like to represent the seller. It's easier work, and you get paid a little bit more on percentage fee. At least I did. So anyway, that's kind of how that works. But that's a nice little deal in the software space. But again, you don't typically see technology companies that feel like they have a good growth runway ahead of them sell. Because they said, why should I give that value to a private equity guy? I want to get it for myself over time. But if you're one of those tech companies that maybe has seen the inflection point in your growth rate, and now you're on the back 9 of your growth story, then maybe you start to think about it. That's typically what we've seen out there in the tech space. S&P down 22 points. That's about 0.3%. The NASDAQ down 70 points. Also about a third of 1% here. Coming up, we're going to check in with Jeffrey Cleveland, Chief Economist of Payton & Rego. He's out there in LA, get his outlook for the U.S. economy. That's coming up. This is
All right, let's listen into live now about the hurricane.
Do you anticipate calling an emergency at all tonight or tomorrow morning? It's something we're considering. It's nothing as far as fire out is concerned. As far as fire out, right now, no. But if conditions get worse, if the storm turns in any way, if it poses a threat, we think about it.
There's a lot of feedback. There's a lot of background noise in that broadcast, so I'm going to stop it. Let's listen to Kevin O'Leary.
One day, you won't have to assemble the entire creative team for every new little request. Are they all wearing hats? Indoors? But before that happens.
O'Leary Ventures Chairman, Kevin O'Leary. I sort of agree with you in this sense. If the Federal Reserve cuts interest rates when asset prices across the board, stocks, risky assets, stocks, crypto, you name it, are at or near all-time highs, the Fed is just going to juice those assets even more. And what message does that send, Kevin?
It's not a good look. The Fed's in a very difficult situation. First of all, Powell, the outgoing, as you pointed out correctly, Fed chair, is very frisky when he knows he's going out. He doesn't have to worry about much because he's at the end, he's in the 9th inning of the tenure. So he's not going to do anything he doesn't think the right thing. And he also has a board he has to contend with other governors. The problem is, with the exception of California, which is a economic disaster, they have unemployment of 5.5%. And that's because of bad policy and lack of executional skills at both the state and municipal level, and they've got to fix themselves. They're broken. Everybody knows that, and they're losing jobs like crazy. But forget about that wasteland for a second. The rest of the country is on fire, literally. It's doing incredibly well, and policy is accommodative, even at this rate. And we've got almost full employment. And as you said, if you drop the Fed rates, you're going to spike these asset classes, including the risky ones, even higher. For what purpose? What are we trying to fix right now? So if I'm Powell and saying, wait a second, all cylinders are firing. We don't have a problem here. Now, if there's going to be a cut at all, max, it's 25 basis points, but I am not investing on that basis. I think you may get a surprise, and he'll just say, look, the data's coming in hot, we're not cutting, and I know I'm getting whacked, so I'm not worried about it. Deal with it. And, Fed bashing, I actually enjoy it. It's very entertaining. I love Fed bashing. It's part of what the president has to do every administration. I love it. It's fun.
Yeah.
But the Fed doesn't give a poo-poo. They don't give a poo-poo.
Larry Kudlow will look at me and go, no name calling. I'm like, oh, I got a bucket of names right here. I'm a fish tosser.
All right, Kevin, I want to shift gears just a little bit because AI is here, artificial intelligence. But the AFL-CIO, other labor groups, they're trying to mobilize to fight AI in the workforce. How do you see this playing out?
They're not going to win that one. Not long term. In every single sector of the economy, what was considered 24 months ago to be hype, AI is proving itself to be a very, very effective, productive tool. I don't care what sector you look at. All 11 sectors, including real estate, every sector, even the entertainment sector. It is powerful, it is working, it is advancing, and it's going to change life for a lot of people in a good way. So unions can fight this, but you can't stop technology. I'm sure somebody back when the first automotive car rolled off the Ford assembly line, some buggy maker said, we're going to protest this, but it doesn't work long term. And AI is, I'm watching in my own businesses, I am getting blown away by the productivity we're getting. Even in financial services like insurance, we're killing it. It's unbelievable what's happening. It's one of the reasons the market's so hot. The market sees productivity and margin enhancement everywhere with AI.
I just want to add one thing. Do you know how irretrievably stupid these union leaders are? The jobs that are at risk are the coders and the software developers and the white collar jobs. It's not the skilled labor. It's not the jobs that these unions represent. That's how dumb they are. Their jobs and unions will actually benefit from AI because welders, HVAC, electricians, skilled labor, those jobs will still be in demand. Kevin, final word.
Yeah, well, there's lots more jobs coming that are high paying in construction of data centers. I do that.
Right.
We are going to be hiring tens of thousands of people, high paying construction engineering jobs of every sector of engineering, from electrical to mechanical to computer design. This sector is also on fire.
Mr. Wonderful, Kevin O'Leary, thanks so much for joining us on The Bottom Line. Do appreciate it.
Good to see you, Kevin.
Take care.
Yeah, I'm an AI, but I'm here to talk apps. Real apps you can build in minutes with Base 44. This finance app solves your business headaches. Tracking invoices, managing clients, keeping payments in check, all in one place. Go to Base 44 and write your prompt, what your app should do, how it should look.
And then policymakers had available the data at that meeting. So I think that should change people's minds a little bit, nudge them in the direction that maybe the labor market is the bigger risk and inflation is not the big risk. But we'll have to see how he characterizes it tomorrow.
All right, and we had a 2-day sell-off in tech shares. So how would you describe, what would you say about the recent dip in tech stocks?
I think investors got really enthusiastic in the last 10 days about maybe a 50 basis point cut. Then we got CPI and then PPI. which was a bit hotter than expected. And I think, the tone had shifted. And then now the narrative is back to, could Powell actually be hawkish tomorrow? So that's been the big question from a lot of clients and colleagues. So perhaps that's weighing on the market. This morning in particular, I think the market might be paying attention to the wrong thing. Look at the manufacturing data, yes, back above 50, but to us, we're looking at the labor market. That's really important for us, and continuing claims hit another cycle high in the latest week of data. I think that really matters if you think about where the unemployment rate might go next. So that should probably be the top of mind for investors, not the manufacturing data, in my view.
And Jeffrey, we've had now a couple of weeks to kind of digest that labor market. We had those, negative revisions that caught everybody off guard a little bit. Again, with some hindsight, what do you think's going on there?
Well, the labor market is slowing. It has slowed relative to 2024 pretty substantially. I think the positive spin that I've heard, Paul, is that, it's fine. The labor market has found a new sort of equilibrium. Look at the unemployment rate, it's quite low. But that makes me nervous. Job growth slowing. Usually when job growth slows under 100,000, it doesn't pick back up. It doesn't just stay there. That's the precursor to a bigger slowdown. So I'm nervous there. I also think people pointing to the unemployment rate being quite low. Yeah, it's been low for a while, but it usually doesn't stay steady. It's usually slowly falling. Which would be a good sign of a cycle expansion, or it's rising quite rapidly. So I wouldn't put all my faith on the location of the unemployment rate. And some of the other positive spin out there is that, everything's due to tariffs and things will pick back up in the fall. Companies are going to get all of a sudden more certain. I can't really get on board with that. I don't know that we're going to have a lot of certainty around tariffs by the fall that would really change hiring managers' decisions. So to me, when I look at the labor market, it's a slowing labor market with risk to the downside. That would be my key remark. And why policymakers are so focused on inflation, I think, is because they're fighting the last war. They got burned by inflation in 21 and 22. They don't want to make that mistake again publicly. I understand that, but maybe, just maybe, that's clouding their view right now.
And Jeffrey, since you mentioned tariffs, how are the markets going to continue to price them in? Can you dig deeper into that? You mentioned it.
Yeah, for us, we think that the goal of the administration is to settle in with an effective tariff rate of around 15%. Undoubtedly, that's higher than it was in 2024. It was 2%. So that's a big increase. We think that's an increase it's a tax. It's a tax on consumers, the tax on businesses. We can debate about who's paying the tax. I think consumers are going to pay a lot of that tax. We think that's growth negative. So we marked down our GDP call for this year and going forward, but it's not a recession call, right? It's just slower. We would call it subpar GDP growth, more sluggish GDP growth, but not a recession. That's how we're taking it in. And we don't think the tariffs are inflationary. It's tricky to think about, but tariffs increase the prices on certain goods, but inflation is the story of the overall decline in the purchasing power of the money in your pocket or in your bank account. That's what inflation is. Tariffs are a relative shift in some of those prices. So we're not worried about tariffs from the inflation standpoint. We're worried about tariffs from the growth standpoint.
Jeffrey, thanks so much for your time once again. Appreciate it. As always, Jeffrey Cleveland, Chief Economist at Peyton & Regal, joining us via Zoom out there.
The problem with Kevin O'Leary, that was the one video before the one I just stopped. He's saying, the economy is hot, the job market's hot. Well, wait a minute here. Now, that was on Fox News. Now, he's dealing with infrastructure with AI. The Mag 7 are starting to sell off. A lot of portfolios are heavily weighted the Mag 7. And those are all tied to AI. Now, Kevin O'Leary is dealing with AI build out, dealing with networks, the servers, right? And he's saying that there's lots of companies that are seeing productivity gains. Yet MIT's paper just came out yesterday or the day before that stated that productivity gains aren't there and they are not going to be there for at least a couple of years. Most companies don't even know how to use AI to actually improve their processes. So there is a barrier, there's a resistance that's happening within organizations, either because of know-how or in terms of the AI models are just not robust enough to be able to do certain processes. So Kevin O'Leary is more of a sales guy in terms of productivity gains in companies. Now, in some industries or some job workflows, it works really well. For example, chat service centers, or how to do it yourself fixing certain things, or a database where you ask the AI, how do you do this type of process for the organization if you train the model for different processes, so like a user manual. Okay. But if tech companies are having a hard time being able to create an AI assistant for your home, which I think is probably far easier to do than having an AI assistant for your work, then Kevin O'Leary may be right on building the infrastructure, it's hot, but in terms of actually productivity gains with using AI models, it's not there yet. It's just not there yet. And MIT's research has proven it. So Kevin O'Leary is just a sales guy. He always has been a sales guy, all talk and no action. So, all right, so where are we at with AI in terms of the job market? Will people get displaced? Yes, it will happen. But it's going to be incremental, all right? Until the recession hits. And then it'll be adopted more quickly, all right? I'm not of the persuasion that when there are layoffs in the next recession that individuals will be called back or re-employed as easily as previous recessions. I think it will be more structural. And it's because of this AI, all right? But businesses will start to realize that they're trying to implement something that's not fully prime time yet, and their productivity will start to go down, their efficiencies will start to go down, and they'll have to rehire, but there is going to be a lag here. So they know that AI is hitting a brick wall in terms of efficiency within a company. A lot of people are trying things, but how much, once you automate certain things, how much of it can continue to be automated? There's a brick wall that's starting to happen in organizations. Recession hits, people get laid off, so the companies save money. You'll have CEOs that will try to leverage AI to maintain those margins of efficiency when the economy starts to get better, but the unemployment rate's going to stay structural, won't be cyclical, because there's not a rehiring at the same pace. There will be rehiring, but not as fast. So what will happen is that there'll be declining revenue, and there's not going to be increased there's not going to be increased efficiencies with using AI within these companies. And so revenues start to go down, margins potentially are going down, and their stock price starts to wane. Then businesses will realize, well, wait a minute, we're at a brick wall with AI, and we have to rehire. So there'll be then this rehiring from the ones that have been not called back from getting out of the recession. So there's going to be a lag. So you'll have a recessionary period, people get laid off, unemployment rate gets to 6.5 or more, and then about 8 months in to the recession, maybe 9 months in, then some people will be called back, Unemployment rate now is at 5. All right, in this scenario, still higher than what it is right now. I think unemployment rate is still at 4.2. I'd have to double check that. And companies are starting to realize they can't leverage AI much more. It's reached an S curve. And then 12 months from the moment that the recession started, maybe 15 months in after, then there may be additional individuals being employed back into the system. So there's going to be I think that there's going to be a lag effect in terms of individuals getting re-employed into the economy, because corporations are going to think that they're going to be able to have this quick efficiency from the AI, but yet it's not there. Now, in some industries, you can automate things much quicker, and it's really scripts. Like for example, people that have done Excel a lot can write macros and SQL scripts, right? And you can write a script and code within Excel. Well, you can ask the AI to give you a code to do this, and you can automate certain processes within the spreadsheet to speed the process. But you still need an individual to do some of the analytical work and create when to use the macro or when to use the script. Now, AI being able to generate code, either for scripts or for macros on certain types of software, I see that being helpful, but you still need an individual to know when to use it. And if you don't have an employee that knows what macro to run or what script to use, you'll have this library, but you won't have an employee to know what is in the library and when to use it. So there is this efficiency barrier that starts to pop up. Now, in, let's say, generating apps, like from Xcode, or for, writing code for Mac or iOS or for Windows or for Android, right? There are apps, code AI assistant apps that will help you to write this code. So coders are going to be more efficient, so you'll need less coders. So efficiency depends on the industry, and it depends on what workflow are we talking about. But the bulk of efficiency in the economy, when you look at it from the aggregate, you're not talking about coders. You're talking about back office, mid office, front office operations. How much of that can be automated? How much of that can you get efficiency from? And in some situations, some companies will not be able to get the efficiency gains that people are pricing in the market. So this is very similar to the dot-com bubble. Now, everyone will admit that the internet has created efficiency for companies, but it's a little bit frothy for the stock market with the Mag 7. And so we're seeing this kind of the sell-off. I think the earnings per share multiple is too high, and it needs to kind of come back down. It's going to take some time for these companies to get the efficiency. So I don't believe what Kevin O'Leary is saying. It's very hot for the data centers because they're crunching out these models, thinking that you need the model to give you the efficiency, and that if we just have a bigger model, you'll be more efficient. That's basically what they're saying. Build a bigger model, and then it'll be more efficient. It's not efficient enough. A bigger model. We need a bigger data center. So that part of the industry is, quote, hot, as Kevin O'Leary is saying. But the efficiency gains within companies is lacking. It's lacking. Now, you'll have some CEOs that will be, quote, futuristic and think that they can build those efficiency gains quicker in their organization than they really can. And it will hurt them in the long run. But there will be efficiency gains, but it's going to take time. This is probably a 3-year build out, but it's coming. It's coming. Please go to my store, the-studio-reykjavik.com, and get the clarity factor. This will get rid of brain fog and help to consolidate your memory. By taking this and drinking filtered water every day, you're going to be able to concentrate on tasks, either at work or at school or at home. Super important to take, no matter what your age is, 20s, 30s, 40s, 50s, geriatric, it doesn't matter. Take it every day, all right? And get rid of that brain fog, and it'll help to improve that positive neuroplasticity and improve your memory. Omega-3 will help with your cardiovascular health. It'll bring down inflammation and help with lipid profile. Super important for cardiovascular health. Take it every day. It'll help to bring down LDL levels and increase your HDL levels. When you do that, you're reducing the chances of plaque formation. And Myotrol, if you're 40 years of age, you should be taking Myotrol. If you're 40 years of age or older, you should be taking Myotrol right away. Do some resistance training so you can build muscle, maintain that muscle, all right? As you get older, you can't build muscle as easy as when you were in your teens or in your 20s. Why? Because of gene expression. When you get older, your genes methylate, and you just can't express genes like they used to. So what you want to do is take Myotrol, do resistance training. It's polyphenols, flavonoids, and lignans to help you build up muscle and maintain muscle and help with the mitochondrial health. You need ATP to build muscle and maintain muscle. If you're an athlete, you will benefit from this, either if you're an older athlete or a younger athlete, and stack this with gladiator barley to get the max benefits to building muscle. But it's really important as an anti-aging protocol to reduce atrophy and to build up that muscle. And by building up muscle, you'll be able to control your A1C levels more. Now, I have a stack here that will help with your bone density and your cardiovascular health. Nattokinase is fibrinolytic, and it'll help to bring down LDL levels and increase your HDL levels. Very important for cardiovascular health. Vitamin K2 will help with bone density. It helps to absorb calcium. And vitamin D3 helps to absorb calcium. Vitamin D3 also is a cofactor for gene expression and will help to get rid of cells that need to go into apoptosis, especially if they're infected. So stack these together, do resistance training, and you're going to build denser bone. Also, D3 and K2 works together to help to pull some of that calcium depositing out of the vascular system and reduce the calcium depositing. So this will help with your cardiovascular health, especially when you stack with nattokinase. So please go to my store, the-studio-reykjavik.com, and get the very high quality supplements I have. Use discount 5, you get $5 off any order. If you spend $100 or more, you get a free gift until supplies last. It's time to get on board and get healthy and slow down the aging process and improve your longevity.
Wasn't a big deal. Trump was always going to be able to fill that seat. Lisa Cook's seat, her governorship, the person who will be occupying this governorship, this will last more than a decade. And if Trump is able to oust her, then he will be able to choose a member of the Board of Governors, which matters a lot for regulatory policy, who also votes on the Federal Open Market Committee, which sets monetary policy, and will have another voice influencing those policy decisions for more than a decade. Now, what's a little bit tricky is that we just saw a recent call from the Department of Justice asking Chairman Powell to oust Lisa Cook. Of course, we know there's going to be an investigation by the Department of Justice. That sounds like that's ongoing. But one thing that I want to note is that, to the best of my knowledge, it's only up to the president to remove a member of the Board of Governors for cause. And I believe that's under Section 10.2 of the Federal Reserve Act. It does not look to me, not a trained lawyer, but it does not look to me like Chairman Powell himself can remove Lisa Cook.
Well, Stuart, I'm glad you brought that up, because that's what I want to ask, because Lisa Cook has said she has no intention of being bullied. Like, she doesn't want to step down. So if she doesn't resign, I mean, can you go more into that path for the president to possibly fire her?
Yeah, so there are going to be a few different processes that are ongoing. The first sounds like it's going to be an investigation by the Department of Justice examining cases of mortgage fraud. It seems to me like that's a plausible path where he could remove her from office. But again, lacking any sort of evidence, who knows about the credibility of the allegations. I haven't seen any documentation. There's been more reporting on it than I've had time to review. When we think about the internal process at the Federal Reserve that'll be ongoing, I'm sure there will be an Inspector General examination of her financial disclosures and inquiring a bit more into transactions, including mortgages that she's taken out on her 2 homes. And we do know that Chairman Powell, as the leader of the Board of Governors and as the leader of the Federal Reserve System, he takes these investigations pretty seriously. When instances of perhaps financial misconduct or questions of financial misconduct arose around 2020 regarding regional Federal Reserve branch presidents, namely Eric Rosengren in Boston, Chairman Powell was very serious in investigating those transactions. The difference is Chairman Powell and the Board of Governors has far more discretion and far more power in their ability to remove Federal Reserve regional bank presidents than they do in removing members of the board. So as much as there will be an internal investigation in the Fed, it sounds like Governor Cook is willing to participate in those investigations and cooperate. The board itself, I believe, has relatively little power to remove a member of their own.
All right, Stuart. A little more than a week ago, Bloomberg Television Secretary Treasury Scott Bessent said, quote, any model would argue or support for 150 to a 175 basis point easing in interest rates. You guys at Bloomberg Economics, you've got some models. What do you think? Do any of your models suggest that type of easing as we wait for Fed Chairman Powell tomorrow?
No, basically no model suggests that 100 or 150 basis points of easing would be warranted. You could pretty easily get to a quarter point of easing. And that's why we do expect to see one interest rate cut this year. Whether it comes in September or whether it comes in December isn't really material from an economic perspective. Of course, market's pricing at about an 85% probability that the move is in September. But as we were hearing even just this morning from Regional Federal Reserve Bank President Beth Hammack, it's certainly not a mortal lock. A low unemployment rate of 4.2% in her view, and given the fact that the Federal Reserve target for the Fed funds rate is roughly in line with her estimate of neutral. Again, she doesn't think that it's entirely warranted that there's a move in September. So, no model really thinks that it would be appropriate to cut rates by 100 basis points. A quarter point, sure, but not really sure what Secretary Bessent is looking at.
Right. And before he goes through, I got to bring you back to the Mortgage Fraud Act.
I think he meant over a period of time within a 15-month period. Please go to my store, the-studio-reykjavik.com, and get the Boomer Boost. Boomer Boost has 68 nutrients. It has a very comprehensive compound profile. Read it. Read the label on my website, the-studio-reykjavik.com. This will focus on multiple systems: brain function, heart, vascular system, musculature, boost up energy levels, and rev up metabolism. Very powerful. You need to take this every day. If you want to lose weight, this is a great way to lose weight. But if you have the BMI target and you don't want to lose weight, that's okay. Maintain your calorie intake and take this, and you will get lots of benefits. For ones that want to lose weight, what you want to do is use this for your breakfast or for your lunch. Put it in soft foods like yogurt or hummus, all right, and take it every day. And what you'll do is you'll have the energy levels throughout the day, and you'll be able to lose weight safely. It's important to lose weight consistently and safely so it's permanent, all right? If you lose weight fast and you don't change your lifestyle, you're going to gain the weight again. So please go to my store, the-studio-reykjavik.com, get the Boomer Boost. Again, you will benefit in terms of if you want to lose weight, but you will also benefit if you're at the BMI that is the proper target for you. So please go to my store, the-studio-reykjavik.com. Take a scooper a day, mix it with soft foods, filtered water, a smoothie, or even milk, but take it every day and you will improve these multiple systems. You'll be able to get rid of that brain fog. You'll be able to focus. It'll improve your neural connections. You'll think faster. You'll have better memory. You'll have better sleep. Super important. All right. So please go to my store, the-studio-reykjavik.com. This is very powerful stuff. And it's the fourth part of my core protocol where you're boosting up your energy levels and revving up the metabolism. And if you're an athlete, use this as your pre or post-workout fuel source and you'll get added gains. And lastly, Gladiator Barley. Gladiator Barley stacks really well with Myotrol and Boomer Boost. You do resistance training and you'll gain muscle. It's a high density protein. You take it every day, mix it with soft foods, filtered water, a smoothie, or even with milk. But take this every day. It also will help to detoxify your body, bring down inflammation. That's important. You'll recover quicker. You'll help with your brain function because by bringing down inflammation at the cerebral level, you're maintaining the health of your neurons. Bringing down inflammation at the cardiovascular level is going to reduce plaque formation. Bringing down inflammation at the joint level will help with the health of your joints and reduce inflammation at the joint level and reduce osteoporosis and arthritis. So there's lots of things that you can do to improve your health by taking Gladiator Barley, and it'll soak up free radicals through superoxide dismutase. So this is powerful stuff here, and you're detoxifying your body every day. So a really powerful combo here is the Boomer Boost and the Gladiator Barley, and stack it with Myotrol. Now again, Myotrol helps with the gene expression for muscles. So please go to my store, the-studio-reykjavik.com. Use discount 5, you get $5 off any order. If you spend $100 or more, you get a free gift until supplies last. Thank you for listening and have a nice day.